హలో ఫ్రెండ్స్, వెల్కమ్ టు మనీ పర్స్. లెట్స్ లెర్న్ సంథింగ్ న్యూ టుడే. ప్రజెంట్ మార్కెట్ కండిషన్లో ఏదైతే వాలటాలిటీ చూస్తున్నా, ఈ సివియర్ వాలటాలిటీతోని చాలామంది ఇన్వెస్టర్లోనూ ఒక ఫియర్ అయితే కనబడుతుంది. అండ్ కింద కామెంట్ సెక్షన్లో మన సబ్స్క్రైబ్లో చాలామంది ఈ టైంలో ఇన్వెస్ట్ చేయాలా లేకపోతే డబ్బులు విత్డ్రా చేసుకోవాలన్న వరీ ఫ్యాక్టర్ కన్ఫ్యూజన్ అయితే కనబడుతుంది. ఈ కన్ఫ్యూజన్కి ఒక క్లారిటీ ఇద్దాం. ఒక మంచి ఎక్స్పర్ట్ని తీసుకొచ్చినట్టయితే మీకు ఒక మంచి క్లారిటీ అని, అలాగే ఒక కాన్ఫిడెన్స్ అయితే వస్తుంది కదా అని మించి థర్స్డే రోజు మన డైలీ మనిషిలో అడిగాం. అండ్ మీరందరూ రిక్వెస్ట్ చేసిన విధంగా నేను కూడా సమిత్ వర్తక్ గారిని రిక్వెస్ట్ చేసేసరికి ఆయన ఒప్పుకుని ఒక చాలా మంచి ఇంటర్వ్యూ ఇచ్చారు. నేను యాక్చువల్లీ ఇంటర్వ్యూని ఓన్లీ ప్రెజెంట్ మార్కెట్ కండిషన్ రిలేటెడ్గా మాత్రమే చేద్దాం అనుకున్నాను. బట్ కానీ ప్రెజెంట్ మార్కెట్ కండిషన్ గురించి అండ్ అలాగే ఈ మార్కెట్ కండిషన్లో మనం ఎలాంటి యాక్షన్స్ తీసుకోవాలి అండ్ ఎలాంటి స్టాక్స్ని అవాయిడ్ చేయాలి అండ్ అలాగే చాలా మిత్స్ ఉంటాయి మార్కెట్లో. అలాంటి మిత్స్ బర్స్ట్ అవుతాయి ఇక్కడ. అలాంటి ఇన్ఫర్మేషన్ కూడా ఆయన షేర్ చేశారు. ఎవరికైతే సమిత్ వర్తక్ గారి గురించి తెలియదో, సో ఆయన మహారాష్ట్రలో ఒక రైతుకి పుట్టి అక్కడ నుంచి మన కంట్రీలో వన్ ఆఫ్ ది బెస్ట్ ఫండ్ మేనేజర్గా ఎదిగారు. ఇట్స్ అన్ ఇన్స్పైరింగ్ జర్నీ. అండ్ అది మాత్రమే కాదు, ఆయన మేనేజ్ చేసిన ఫండ్స్ యొక్క పర్ఫార్మెన్స్ మీరు చూసారనుకోండి, ఒకసారి వెళ్ళి చూడండి. వన్ ఆఫ్ ది బెస్ట్ పర్ఫార్మింగ్ ఫండ్స్ అవి. సో ఇంత కరెక్షన్లో కూడా ఆయన మేనేజ్ చేసిన వన్ ఫండ్ లాస్ట్ 3 yearsలో 36% పైన సిఏజిఆర్ రిటర్న్ డెలివర్ చేసింది, విచ్ ఇస్ ఫినామినల్ కదా. అండ్ మార్కెట్లో సమిత్ వర్తక్ గారు ఈజ్ ఫేమస్ ఫర్ మిడ్ అండ్ స్మాల్ క్యాప్స్, మల్టీబ్యాగర్ మిడ్ అండ్ స్మాల్ క్యాప్స్ని అయితే ఆయన పిక్ చేశారు. సో దానికి ఈజ్ వెరీ ఫేమస్ ఫర్ ఇట్. ఈరోజు మన ఇంటర్వ్యూలో మీకు కూడా చాలా సాలిడ్ ఇన్ఫర్మేషన్ అయితే దొరుకుతున్నది ఈ ప్రెజెంట్ మార్కెట్ రిలేటెడ్గా. అండ్ ఫ్యూచర్లో మీ పోర్ట్ఫోలియోస్ కన్స్ట్రక్షన్ రిలేటెడ్గా మీకు సాలిడ్ కంటెంట్ అయితే దొరుకుతుంది. సో వీడియో ఎక్కడైనా మీకు స్లోగా అనిపించినట్టయితే 1.25x 1.5xలో పెట్టుకుని చూడడానికి స్కిప్ చేయకుండా చివరి వరకు ప్రయత్నించండి. ఎందుకంటే మీకు చాలా లెర్నింగ్ అయితే దొరుకుతుంది. సో చాలామంది మిస్ చేస్తుంటారు లెంత్ని చూసి, అలా మిస్ అవ్వకుండా ఉండాలని చెప్తున్నాను. అండ్ అలాగే ఎవరికైతే తెలుగులో సమ్మరీ కావాలో వీడియో చివరిలోని నేను షార్ట్ సమ్మరీ రూపంలో మీకు తెలుగులో ఎక్స్ప్లెయిన్ చేస్తాను. అండ్ ఈ వీడియో చూస్తున్న ఏ పాయింట్ ఆఫ్ టైంలో మేము పెట్టిన ఎఫర్ట్ మీకు హెల్ప్ఫుల్ అయింది అనిపించినట్టయితే వీడియోని అప్పుడే లైక్ చేయడానికి ప్రయత్నించండి. జనరల్లీ ఇలాంటి ఎక్స్పర్ట్ ఇంటర్వ్యూస్ అవి పెయిడ్ వెబినార్స్ కింద చాలామంది పెడుతుంటారు. మన ఛానల్లో ఎక్స్పర్ట్ సిరీస్ ఇంటర్వ్యూ ప్లేలిస్ట్లో మీకు ఫ్రీగా అవైలబుల్గా ఉంటుంది. సో ఈ వీడియోకి నేను 10,000 లైక్స్ టార్గెట్ ఇస్తున్నాను. మీ ఫ్రెండ్స్ అండ్ ఫ్యామిలీ మెంబర్స్కి వీడియోని షేర్ చేయడానికి ప్రయత్నించండి. అండ్ సమిత్ వారి దగ్గర మీకు ఇంట్రడ్యూస్ చేసే ముందు సుజన్ వర్మకి థ్యాంక్స్ చెప్పాలి, మన సబ్స్క్రైబర్, మన మనీ పర్సన్. ఎందుకంటే తను ఇనిషియేటివ్ తీసుకుని మనకు సపోర్ట్ చేసిన తర్వాతే యాక్చువల్లీ ఇది తొందరగా ఇంటర్వ్యూ చేయడానికి అయితే మనకు హెల్ప్ఫుల్ అయింది. థ్యాంక్ యూ సుజన్ ఫర్ దట్. లెట్ మీ ఇంట్రడ్యూస్ సమిత్ వర్తక్ గారు నౌ. Thanks a lot, Samit, for accepting our invite in such a short notice and taking out time for our subscribers. I'm sure this session will add a lot of value to my subscribers. Most of them are investors. So in this volatile condition, I'm sure the inputs from you will help them a lot.
Absolutely, my pleasure. I hope I add value, and really looking forward to this conversation.
Okay. Samit, my first question, this is the burning question. Before our interview, I have asked our subscribers if I bring a good expert to the channel. Okay, in present scenario, what is that one question if you want to ask, you ask in the comment section. And what I got from 80% of the viewers, there are 20% exceptional cases, but there are 80% of the viewers. What they said is, we are continuing our investments, we are continuing our SIPs, but if I have some additional money, okay, is it the time to invest or shall I wait? Because this is a scenario where they have not seen before, because the higher inflation scenario which world is facing, they haven't seen before. So is it better to pump in right now or shall I wait for some time and pump in that additional money?
Yes. First thing is, these are questions where, I can give opinions, but, there is no guarantee to, whether it's an accurate answer or not. So that's,
No
disclaimer. Right. See, I mean, you got to look at the history, how, equity markets work. Equity market returns are very concentrated, so I had done analysis of, past 25, 30 years of Sensex. Actually from 1979, right? And if you look at Sensex returns in those sort of 40 years, they are probably up 300x during that time, right? And then what I did was I looked at what were the returns for the best 1% days out of those 10,000 days of trading that happened during the last 40 years. And if you remove those 1% best days, your returns were zero. So that's how concentrated the returns are. That means if you miss out on the best 1% days, you can miss out on a lot of returns, right? So from that angle, it's very difficult to know, when those 1% days will play out or when that, jump will come. Like, for example, if you had entered in 1992, okay, the Harshad Mehta bull run, right? The Sensex, even in 2003, was at the same level. So in between, things went up and then came down. But in 10, 11 years, there were zero returns in the stock market. And then from 2003 onwards to 2007, we had a biggest bull run ever in India's market. When Sensex, Nifty all went up by 6 or 7x.
Yes.
And then also mid caps, small caps went by 11 or 13x during that time. And then again, we had that crash, after 2008 and 9. And then if you look at the Sensex level, then the same Sensex level even existed at the end of 2013. So you spent almost 6 years, no returns. There you spent 11 years, 10 years, no returns. Yes. And then again, we had a bull run from 2014 onwards, 2017. And then again, we have, so, these are cycles through which markets go, right? And I know that people do say that, there is no point in timing the market. I don't agree with that exact view, because in the long run, what valuation you enter at will make a lot of difference to your total returns. For example, in 1992, the price to book is a much reliable measure of valuation in the long run, even compared to price to earnings or any other measure, because earnings is something which sometimes you don't know whether the receivables are going to come through, and earnings may be manipulated, depending on your capitalization policies, depreciation policies, whereas price to book is much more sort of stable kind of a multiple,
and earnings can be cyclical as well.
Yeah, earnings, the margins are very, very cyclical. Sometimes companies can have 5% margin, sometimes they can have 30% margin. And you don't know whether if you take the P multiple at 30% margin, it will look very different than when you take it at 5% margin. Whereas book is generally pretty stable. It doesn't, it's not as volatile, right? And in 1992, the price to book was at 10 times, and then you spend 10 years making no money, right? In 2007, and that peak, the price to book was 6.5. You spend 6.5 years making no money, right? So absolutely, you got to look at in the long run how low is the price to book. The average price to book is somewhere in between 3 to 3.5 times. If you enter at price to book, which is at 2 times, you can be rest assured that mostly you will make money in the next 1 year or 2 year or 3 years. And the returns that you made, the price to book dropped to almost 1.7 in 2003. It dropped to 2 times in 2009, and again in 2013, when we had that crash, it again went to almost at 2 times. And if you entered at that point, the next few years you made tremendous kind of returns. Today we are not at that. We are neither at those extremes. We are probably just below 3 times kind of price to book, so which is a reasonable time to get into the market. It's not like super attractive like 2 times, because then for that we have to still fall 1/3. So I think if you have a long enough view of more than 3 years, then it's a reasonable time. And one more I think logic I would give, right? When you ask any advisor or fund managers, what is the reasonable time period that you should assume while getting into the market? Most people will say at least 5 years, all of that. There is a logic to that, right? Because what happens is that if you unfortunately come in at the peak of the market, what happens is that then the markets, generally go down, correct? Especially from the peak. And that correction would take about 15 months. Roughly about 15 months is an average correction time period, right? So during that time, you'll probably go down by 30%. Then you will take 15 more months or maybe 1.5 years to recover that. So you almost spend 2.5, 3 years without any returns. That's an average. The 1992 example was an extreme, 2008 was an extreme. But this is extremely normal. Spending 3 years without any returns, so especially if you come towards the peak of the market, is very, very common. Now, then you have at least couple of years to make up, where you will get probably a bull market. Every 5 years there will be one bull market. So you'll get that bull market in the last 2 years, and you'll probably make up that 13-15% kind of an average return, right? So that is where people do end up saying that you should come in with at least 5 years. So if you are unlucky to come in at the peak, then, at least you have some opportunity to make up. Not always will you be able to, but high probability of, 90% that you'll make up that money. Today, what has happened is the peak happened in October last year. Right? Yes. From there, Nifty probably is down 15-16%. mid cap is down 22%, small cap is down more than 30%. Right? So major part of that downturn has already taken place. Right? So what you spend in terms of coming down by 15 months, that you already saved if you come in today, right? So, and then also you don't need that much time to recover because you're already entering at the bottom, right? So if you come in today, there is high probability that in the next 2 or 3 years, you will make decent amount of money, right? But in the meantime, in the next 6 months, it can also go down by 10%.
Okay.
That is a risk that one has to take. But
Okay.
in the long run, if you stretch that time period, you don't have to stretch it to 5 years.
Okay.
Even if you
Okay.
stretch, because you're coming towards the bottom, even if you
Okay.
stretch it to 3 years, you will probably make a decent amount.
In such case, there is a little additional point to the question. All these guys are already investors. They are there in markets.
Already.
Their money is there in the market, and their SIPs and all, either in stocks or mutual funds, are continuing. So if they want to add little more additional money, okay, just to grab the opportunity for the lower valuation, so in such case, it is better to wait for some more time to put that additional money. The existing money is already there in the market.
Right. So I think that's where, additional money and trying to make that money in the next 6 months, it's a impossible game to predict. It's all about from this point, what is a reasonable time period when you will definitely make money, right? And when the markets have fallen so much, any incremental money that you put in today, at least if you keep a time horizon of 2 to 3 years, there is high probability that you will make money. If it was, high P multiples or high valuations like 2017 or even last year, then I would say it will take 5 years. So then it's better to wait, because there is high probability that you will get a correction, which typically is 15-20%. Now we have already had a 15-20% correction. So further trying to time, I think it's not worth the wait. It's better to take the further risk of, 5-10%, which is a very random movement in the market. It can happen anytime. Because see, things fundamentally are not that bad in India. Things are really bad in the US market, in Europe, because they help, they raised so much balance sheet and plus donated or, gifted money to the people. And that sort of gave them false, wealth effect. And that is something they ended up spending in the market. And it was a one-time kind of a, booster shot that they got. Indians never got that. And they got used to that less than 2% kind of inflation. Their salary increases typically have been 2 to 3%. There's not much. And then suddenly you see inflation at 8%. It's a big shock, for them. True. Right. And then so much free money, so much leverage was floating in the system that from there they are taking a big knock. For India, I think, we are very much used to 5-6% kind of inflation. For us, 8% is, it's not anything to worry about, and plus our salary increases are typically, 10%. So 10%. Even inflation of 8% is not, something to be worried about. Plus, we never distributed money to the population. So our government's balance sheet, consumer balance sheet, it's not too leveraged at all. Even the corporate balance sheet is pretty strong. And I think India will also benefit from what's happening in China. There is a global Cold War sort of which is emerging right now. And every boardroom, the hottest topic today is how do they diversify or de-risk their supply chain. And that is, if the company has to be a fool, not to take care of that. But because today, if China uses this sort of as a leverage and, hold supply chain as a hostage, then many companies' revenue will go down to zero. Like Apple, will collapse if China says we are not going to supply. That's the risk, and I don't think any company should take that risk. And they are very aware of, and they're becoming more and more aware after going through Trump trade war and then the COVID war, COVID fight, plus what China is doing with Taiwan and, a lot of other countries, plus Ukraine, Russia kind of a war. And hence, I think India should be a beneficiary of that. And fortunately for India, India did take that big tax cut in September 2019. And that has made India very competitive. Plus, they, India has launched PLI scheme. So there are, at least from an export-oriented perspective and manufacturing hub perspective, India is much more attractive today. I think we are at the right time, right place. So that is an added advantage. Plus, as I said, we are not in that precarious situation where globe is, and other technical aspect. globally investors were very leveraged, because they had made so much money. S&P from 2009 onwards, it had a continuous 13 years of
Right.
one-way streak, rally, right? So people got that confidence. It was like a Goldilocks kind of a scenario. I mean, we haven't done as well. I mean, our returns are very subpar, especially in dollar terms in the last, 13 years. And plus, SEBI and exchanges had taken a strong stand of completely taking away leverage from the equity market. Right? Initially, with a 14% kind of a margin, you could leverage, 6, 7 times, and you can do a lot of
Yes.
FNO kind of investment. Today, it's not possible because you have to put 50% in cash margin. So the equity book of investors is not as leveraged, and hence, even if world markets are falling, there are no forced sellers in the market today. So that is also giving a lot of stability. So from a lot of angle, India seems to be a much, relatively stronger market. Of course, you can't escape the global fall. If globe is falling, you will fall with that.
Yes.
But I think when things normalize, India should bounce back much faster because we are much fundamentally stronger today, and there are a lot of growth drivers. I speak to so many companies. Real estate is doing phenomenally well across. You see the
Okay.
demand is really high even after this crash. Mostly new launches are getting sold very very quickly. You try to
Mm.
buy or find a rental place in
Mm.
Bombay, it's very difficult to find. Our
Mm.
If you look at the engineering goods, export oriented, all the companies are putting up new capex. In crams, in specialty chemicals, many of them are putting large amount of capex. Textile, people are putting capex. There are many sectors where these companies are completely deleveraged. There is no loan on their book. Just through internal accruals, they are going for expansion, and that's where the opportunity is. So, if you look at a long-term opportunity, there is no question that these are the times when you have to put in the money with knowing that it can still go down by 10%.
Fantastic. I'm sure this will add a lot of confidence to the viewers. One question, Samit. In last 1 year, many newcomers entered in market, and they would have got an idea from randomly from anywhere, and they would have invested in any sector, any theme. They would have made some money. Last 1 year, the bull market, mein, they would have made money. Now, most of them are gone. It would have wiped out. So, in such high inflation environment, okay, which kind of themes and stocks investors need to avoid, okay, so that they'll it will be a learning for them, so not to play such themes, and at the same time in such scenarios how to play.
Right. Right. See, every time there will be some other reason for markets to go down. As I said, market spends years going flat. In between it will go down, but it will give up all the and that's happened in from 92 to 2003. It happened from 2008 to 2014, and a lot of mid cap. See, small cap index in 2018 January was at 9600. Today it's at probably 8500. So significantly below even like 4.5 years back.
Yes.
So that's how. And in between there will be many reasons. There will be some ILNFS kind of crisis. There will be those risks. There will be COVID. There will be a lot of other issues which will
Mm.
keep on changing your so you got to have a stable investment style. You can't just have an investment style which will work for 6 months and then inflation goes away and then it may not work. So one has to stick with its core investment style. I believe the core investment style in India has to be invest in companies where the earnings in those companies will double in the next 3 to 4 years. You need to find such companies. Earnings growth gives you a lot of cushion against mostly such crashes, as well as even if there is a decompression of P multiple price to book. But if the earnings keep on going up, you don't lose as much money. But if you have a company which is maybe a commoditized kind of a company where the earnings are very cyclical, at a high margin, they make a lot of money. But then for next 10 years, they'll not make any money. So your earnings value
True.
will be flat or it will go down. So even if you enter at a P multiple of 5 times, which may seem cheap, after 10 years, it may be at 2 times, and then
Mm.
you'll end up losing permanent capital because you will not have that patience to stick.
Mm.
Rather than that, even if you have to pay a little higher valuation, get into companies where you have much higher confidence that earnings will come through, right? Now, question is, how do that's the big question. how do you know which are these companies? I mean, it's easy for
My
me to
next
say.
question was
Get into
that
company.
because I read all your memos, I follow all your reviews. How do we find next 3 years with 20
Right.
members of CAG companies?
Right. So see, there are first you need to know which are the companies well you will not touch. So first figure out which are the ones you can throw. And I'm telling you, even if your universe is say 1,000 companies, you can easily throw out 800 companies out of those, and only focus on 200. If you keep on focusing on 1,000 companies, you will not have enough time, and you will not be able to do in-depth work on any of those. So even for us, the universe may be 600 companies as a fund manager,
Hmm.
but our actual shortlist is only 120 companies, which is only 20% of that. And out of those 120 companies, we try to figure out which are the best 20 companies. That's the job. So things where we don't touch, commoditized companies. Now let me define commodity. Right, commoditized companies doesn't mean they are in commodity industries. Companies where the fixed cost is high and the selling price is not in the hands of the company. Like for example, steel can be selling at 35 rupees a kilo or 70 rupees a kilo, but the cost structure of steel companies will remain the same. They will be making exorbitant amount of money at 70 rupees, but probably making losses at 35 rupees, right? So the profit making, they don't really have pricing power. They don't have control over the cost structure, neither do they have control over the selling price. That's a commodity company for you. And as an investor, I mean, the promoter themselves don't have any idea how this profit cycle is going to play out. As an investor, it's almost impossible unless you've tracked it for 10 years or 15 years, where at least you can time, so you can enter and exit at the right time. But that's a very difficult game. So for us, we just put it into no touch kind of a zone.
Okay.
Right?
Okay.
Any companies where sometimes, thing looks really good, maybe it's an ethanol play, there are some government regulations which are coming up, and things look, and they're still commodity. But again, your customer many a times is only one, which is the government. So whenever we see that, we just don't touch that, because
Okay.
it's a very unreliable customer. You don't know what pricing he will pay, as well as whether he will give you the order. It's a very unreliable. You need very much diversified base of customers. So whenever you see, and there are many such companies, it could be infrastructure companies, it could be some ethanol company, a lot of other sectors where, but just remember this factor. PSU companies, again, PSU companies, they are so much controlled by the government that they are not free to do the business. Government can decide one day that, okay, you can't make more than 12% margins. Such company, you just don't touch them.
True.
Right? And so once you discard, then you focus on the companies that you know at least now the fishing pond is of much higher quality, from which you are trying to figure. By throwing out a lot of these companies, anyways, you will beat the market in the long run. Right? Now your job is to figure out how can I do even better than that. And that's where few things that we look for. Okay, if you are looking for high growth rate, it will not come from just economic growth or just from industry growth. It has to come from market share gain. Market share gain is an extremely powerful tool to cover a lot of things. One, it shows you that this company has significant competitive advantages against the competitors. That's the only reason he's able to take away the market share. The market share gain can be from his own country competitors, or it can be also from other countries. But one has to look at, is there a market share gain possibility? And you need to figure out what are the key drivers of that market share gain. You need to study them, whether these are sustainable drivers, or is it just because of pure luck that there is some shutdown in China and suddenly these guys is making money, but it will be shut down. You need to be rest assured that this is because of a structural nature of the competitiveness of the company, based on which it can have that market share gain. Right? So that is one. And plus, invest in companies where return on equity is high enough, because see, companies generate cash. That cash has to be reinvested for them to put up new capacity and then grow. No companies, like there are very 0.001% companies which will grow without putting any capex. They don't need any capital. Right? They are sort of a negative capex kind of
Yes.
growth companies, but most companies. So you need to figure out companies where at least the return on equity is closer to the growth rate that you're looking for. So like for us, we would look that if we are looking for a 25% capex, 25% growth, then the ROE has to at least be 25%. And those are the companies,
Okay.
then they don't need to leverage themselves. So you don't want to go into companies which keep on leveraging themselves. And then I think thirdly, you need to look at every business very strategically. You just can't blindly listen to stories that some analyst is telling you or you're hearing on TV. You need to look at strategically why this company will be able to gain market share and why is their growth momentum will it continue. But one of the factor has to be market share gain. So I'll give you an example. For example,
Okay.
say La Opala, in
Hmm.
2012-13. Right,
Hmm.
suddenly, government had they are into opalware.
Yes.
They sell these plates and dishware like
Yes.
Koren. Right? In 2012, government put up a anti-dumping duty on Taiwan and other countries which
Hmm.
were
Hmm.
exporting into India. Right? And suddenly you had this 5 years window where
Hmm.
Laopala had, knowing that this is coming, they had put up a new capex,
Hmm.
and you could see that there is trigger for growth, that these guys are going to take away market share from the export-oriented countries, right?
Yes.
And then they went through pretty good, sharp increase in sales. Margins expanded because the competition, they 50% of India was importing this stuff,
Hmm.
and they had pretty good, sharp jump. And you could see that, first of all, you need a good manufacturing ability, plus you need a good brand, which no one else had, right?
Hmm.
So that is where that company went up, 10x in just two
Hmm.
years because there was an opportunity. There was no reason why this will not work out, and the entry valuations are typically were pretty good. So you got to look at and you need to know why this company. And once that anti-dumping duty period is over, you also need to be ready to get out. So as a investor who is a proactive investor, generally you should, it's important in India that you need to book profits at the right time once that growth
Yes.
momentum is over. And if
Yes.
you track the factors of growth, typically you'll also get the time to get out.
So you mean to say the market share gain, if there is something comes from the policy angle, government policy angle, then exit is very, very important. If the market share gain comes from the internal either product edge or a operational edge, okay, those things actually can last longer, right? I read in
Exactly.
one of your post, you said APL Apollo was a similar scenario where we found and there was an operation. Could you please throw some light so that
Yes,
viewers can?
yes, sure. See, so this is something that I've been talking about over the last probably 6 years or so, right? So this was an industry which had a lot of unorganized players,
Hmm.
because there are so they manufacture these structural steel tubes, which are basically the raw material is HR coil, which you
Hmm.
will get it from Tata Steel or JSW Steel kind of companies. But the other way of manufacturing these pipes is also by converting scrap into billets and converting those billets into flat rolled sort of coil and then making pipes out of those. So there is a lot of big industry because converting scrap generally has at least 15 to 20% cost advantage, and it's not of that quality, but still there are a lot of people who are okay buying, spending less, and there was a big market, and a lot of those guys were unorganized, so there was no GST or anything that they really paid because they were all selling in the local market, so they didn't even need to transport it for
Hmm.
long. So this is an industry where the total actual market size was just about 70 lakh tons, right? And still, and it wasn't growing because India was in a stagnant growth phase, from that anyway from 2012 to 2019-20, there was no growth, but still this company kept on growing at 15 to 20% volume, and there were few reasons for that. One, of course, the unorganized after GST rollout got disrupted a lot. Between Bombay Pune there were 20 players, not many exist now, so that was one. But he was even within the sort of formal structure, they had multiple advantage because it was the largest player, right? And raw material makes up a big portion of your sales. 75% is raw material because, and it's a low margin but high return on capital business, because even if it's like PBT margin is barely 6%, you can have huge asset turns, and
Yes.
hence your you can sweat the assets multiple times in a year, and hence your return on capital is very very high, 30% plus. So when you're sourcing from JSW Steel or Tata Steel, And even if you get 1.5% kind of a discount, because they are large, just they are the largest buyer, that is a big difference in the margin. Someone else will not get that. And in a 6% PBT margin business, it makes a lot of difference. Secondly, working capital
Yes.
funding, because 75%, you're buying raw material, and then short-term funding is something that you need. Short-term funding for these guys will be at 4%, someone else will be at 6%. Makes a lot of difference. Third is there, they've spent almost 600 crores on capex, putting up new machinery, right? And there, the advantage is that their changeover time is very short, 2 hours, versus some companies can up to 1 to 2 days. So you can't manage so many SKUs, because you keep on changing. These guys have 2,000 SKUs, because they can switch very quickly, and even if there is small order, they can easily supply. So their delivery times drop from 3 weeks to 3 to 4 days, and that is where they gain huge advantage against the competitors, because the suppliers, or the distributors, didn't need to manage so much inventory. Whenever they want, they could get just in time, right? And at the same price at what the others are selling, right? So that enabled them to take away market share big time. First of all, their cost structure was the lowest, and here it makes a lot of difference. So if these guys are making 5,000 rupees per ton of EBITDA, the next guys will not be able to make even half of that. That gives them a significant advantage, because you can price out a lot of players from the market, and hence they have been able to grow. Plus, then once you have a pretty good profit pool, they're debt-free company. They can hire people like Amitabh Bachchan or Tiger Shroff and sponsor Delhi Capital team kind of. They can spend and create brand awareness, similar to what Astral did. So those are the factors which is extremely difficult to replicate. So that's where that these advantages which have enabled them to take away market share will sustain, and they'll be able to do it, because these are operational efficiencies and right strategies. In addition to that, they have been the most proactive in launching new products which never existed in India, like door frames, wood to steel sort of replacement, steel
Yes.
planks, again wood to steel. So they are replacing other materials too and expanding the market for themselves itself. No one was manufacturing half meter by half meter such pipes. These guys are the first one to put up such a plant. So for a lot of infrastructure projects or bullet train projects, airports, you need such pipes which used to be imported into India. These guys are, because of their balance sheet and being proactive with their distribution and connections in the industry, they're able to take this market and create market. So in addition to market share gain, they're also increasing the market itself. And that's what you need to figure. Each industry will have its different competitive advantage. You need to figure out what are those, and again, that's the way to think strategically about a business. Is this the right? If you put yourself in the shoes of the promoter, what would you do? So, and one needs to keep on learning about businesses. As you study more and more businesses, that knowledge will compound. If you do just trading from based on stories, that knowledge will never compound. The 10 years back, what knowledge you have will be the only one. You'll keep on hearing from others what to do and what to do. But if you really start understanding businesses, that knowledge 10 years back and today will be, day and night different. And that you can utilize to generate more returns. I would really encourage a lot of investors, rather than focusing too much time on trying to time the market, because that's where the brain cells get utilized. Forget about that. Just try to understand the businesses as in depth as possible. And if you get confident that this business will be at least generating double the profit in the next 3 or 4 years, forget about the timing. You generally will not lose money. And if you get, and sometimes you'll get good entry points, sometimes you'll get bad entry. But if you get good entry points, you'll probably you are sitting on a big multi-bagger.
Yes.
If you probably get bad entry point, maybe you'll not make money, but you'll do better than the market. And your goal has to be doing better than the market. And timing is an extremely difficult game. But at least whatever factors I said, at least keep those in mind and think a little longer term. And I think those will help you at least keep on beating the market for a long time.
Samit, one more myth I see in market is when there is some business which is a monopoly, or there is some moat in that business, people blindly buy them at any valuation. They think that these monopoly companies can do or deliver multi-bagger, multi-X growth. This is the social media theme which is happening, and people started buying. But what I read in one of your statement, you said even if it is a monopoly, if it is not grabbing market share from the competition, you will not invest in them. Could you please explain that part so that viewers can actually clear this myth from their mind?
Yes. See, now, monopoly generally meaning that, you they don't really have much room to gain market share because you are the whole and sole, supplier to that, right? And see, for most industries, the growth rate will be closer to the nominal GDP of India. Nominal GDP of India is probably close to 12%. And that's where if you see a lot of these monopoly businesses, they tend to grow at that rate. Now, monopoly business, the problem is that what is the edge you have in that business? Right? Because all the investors know that this is the best quality business, and that is factored into the valuation, your entry valuation. Right? So if you have a monopoly business which will grow at 12%, but you are buying it at 60, 70, 80 kind of a multiple, it's very difficult to deliver returns which are above 12%. Just based on, if you assume that the P multiple will remain where they are, and earnings keep on growing at 12%, your returns will be 12%. Right? So if you want to make those returns, that's absolutely a great business for you. My experience has told me that if you want to make incremental, alpha returns, you need to have at least that edge in knowledge about that business. If everyone knows the same thing, it's generally very difficult because that is getting priced into the entry point itself, right? So I'll give you an example. See, in a multi-bagger, there are two drivers. One is earnings growth, but another one is also the P multiple re-rating.
Yes.
Right. So one should focus on, first of all, the earnings growth has to be much higher than the nominal GDP. Otherwise, better to go on to an ETF and invest in a Nifty Bs because that will give you similar kind of returns. Right. So one is, high earnings growth is a requirement. But secondly, the business, other people should think that this is a very uncertain business. And then based on your analysis, you know that this is a much stable, it's a very strong business. It has huge competitive advantages, and that market probably will realize maybe 2 or 3, 4 years down the line. At that time, they are happy paying twice the P multiple or thrice the P multiple. So that's where, if you look at Bajaj Finance, in 2008-9, people thought it was a very risky, uncertain business because that's what their history was. But Rajiv Jain came in and completely changed the business model, and then they used to get 1.5 times price to book. In 4 years, they started getting 6, 7 times kind of a price. So your P multiple itself went up by, 3, 4x, right? And at the same time, the earnings also went up by, 3, 4x, right? So you had like a 20, 25 bagger in a matter of just a few years. You look at PI Industries. PI Industries, no one even paid a 15 times multiple in 2011-12. Right, but by that, and at that time, they thought that it's a monsoon related, they're selling pesticides, so it's a risky business, it's a very cyclical business. But then they started becoming almost like a cramps player for global pesticide companies, right? And that made their sort of earnings very stable because it was based on long-term contracts, 10-year contracts, and where there was very high visibility of growth. People realized that 3, 4 years down the line and started paying it 50 times multiples. So you had like a 3x P multiple re-rating. At the same time, it continued growing at 20% kind of a rate. So in 4 years, even that doubled. So you had like 6, 7, 8 times kind of a multi-bagger in that. Same thing happened with La Opala. When you entered, it's like 9 times P multiple became 30 times P multiple in a matter of 2 years. Right? Because the perception about that business changes. That's where you get huge re-rating. In a monopoly business, if the perception doesn't change, like for example, Asian Paints, right? Today, everyone knows it's a strong business that delivered, so it's the safest business. But it can also happen that if the competitors who are coming in, like Grasim or JSW, and right, and if the perception changes that it's going to be much riskier business, it's very difficult now to know whether there will be. Then the P multiple can also contract, right? And even if the P multiple remains the same, and if your earnings growth is going to be 11, 12%, which can also contract because there is more competition coming in, then what is the return that you can make, right? So all those factors have to be considered. First of all, is there possibility that the P multiple is going to be re-rated? And why would it get re-rated? Because the perception of the business has to change, that it has to be considered a risky business when you entered. And in 3 or 4 years, it needs to be perceived as a very strong, reliable business. And secondly, the earnings growth has to be strong. I would only touch businesses where both of these, maybe the valuation is something that you can ignore, because you will never know whether it's right. But at least the earnings growth has to be high enough. And there is no point in, monopoly is a great business for the promoter. It will keep on generating cash flow. They don't care about the probably price because, they will keep on making money. But as an investor, you will only make money if the earnings will grow.
Yes.
If they have a moat, if they keep on protecting their own business, but if that is not going to help them grow, then as an investor, you don't end up making money. So what's the use?
Samit, in such volatile condition, if you want to invest in certain themes, if you have to pick up certain themes and certain areas where you are bullish and you want to invest, which all such themes which you will be bullish and put money now?
Again, themes and actual company picking is going to be very different. But themes
Hmm.
that I like, I can tell you a theme, but if you pick the wrong player, there will be an issue.
Okay.
But the themes that I like is
Hmm.
real estate. Okay,
Okay.
there are various way of playing real estate. It can be home finance, it can be building materials, it can be actual, bottoms up real estate player.
You are more bullish on
But
the
real
building
estate,
material part, right? You're more bullish on the building material part,
yes,
polycab and
building
all.
material. I'm more, yes, polycab, APL, Apollo, but they are not maybe related to just real estate. They are
Hmm.
also related to
Capex.
the factories, warehouses,
Yes.
construction, airports
Yes.
construction, and all of that. I'm very positive on those capital goods players. I'm also very bullish because I am really bullish on construction or capex because of the firstly there is a 15% tax rate which will end in
Yes.
March 24, right? And plus
Yes.
PLI scheme also have a time limit before which, and then you see the environmental clearance applications from 2019 they have doubled. That means that's a lead indicator. There is capex coming, and you speak to companies, you will see that there is capex happening all
True.
around. Right, so that's I am positive on export oriented things, whether it's pharma API, CRAMS players,
Okay.
textile, agri equipments, agri ancillaries. Those are the players I'm extremely bullish on. Engineering goods, many of these MNCs engineering goods, like whether it's bearings, lot
Hmm.
of MNCs have announced huge capex to make India as their base for
Hmm.
global supply.
Hmm.
I'm extremely positive on few of these bearings players or anything
Like,
which
if I
is
have to put some examples like Carborundum Universe, Grindwell Norton kind of, right?
like Timken and the
Okay.
bearings players like Timken or Schaeffler and those
Hmm.
kind of. But anything where there is an engineering edge, where it's very difficult for others to come in. They have a pretty large sort of monopoly or strong market share in the world. But today they want to supply more and more from the Indian subsidiary rather than
Okay.
from Europe or somewhere else. So there is a lot of that transition happening. Again, it's all about
Yes.
market share gain, for the subsidiary from maybe other parts of their own divisions. So that I'm extremely positive about. I am positive about even agro kind of a theme.
Okay.
And slowly I'm getting positive. I have been staying away from sort of auto
Okay.
play, but I think there is too much pessimism which is coming into especially this two wheeler, and so I'm also getting positive on that theme because the two wheelers used to be 30 million, now it's 20 million. So
Hmm.
already the demand has sharply come down.
Hmm.
Accordingly, expectations and P multiples have corrected. So if you pick the
Hmm.
right ancillary play in that,
Hmm.
again, I think it's a really good thing to play about. I am not that positive on the consumer side of India because
Okay.
I think post COVID, the bottom sort of 80% of the population, is not doing that great. And plus, they have been the highest impacted by inflation, whether it's food
Hmm.
inflation, oil inflation, and they have much less discretionary spending power, and anything where, any company which is supplying or providing any product to them, I think the growth will be impacted significantly. So again, as I said, it's important to know what not to touch and then figure out your universe to play, which is of sort of high yielding companies, and try to pick up a portfolio of 15, 20 stocks, where I think generally just by avoiding not to touch, it's yourself will be in a much better position. Plus, if
Yes.
you can think strategically and think business wise and then pick the right businesses from the themes, I think there is significant, I think, money to be made over the next 10
Okay.
years. I think the next 10 years for India will be much better than the last 10 years. Next 5 years will be much better than last 5 years. And because we had so many crises, the banking crisis, IL&FS, we had the GST rollout, we have the demon, and we had a pretty struggling economy. Even though the world economy was doing great, we haven't done that well. I think after the tax cut, after the deleveraging that the company has gone through, I think we are in a much better shape today to take advantage of these opportunities. The market share gain from China. India became a manufacturing hub. A lot of companies are doing it, and you can see it from the interest that is shown in the PLI scheme as well as the capex announcement. So I think this is the time to take advantage of that.
Okay. And before I close this session, I want to say one thing. Thank you. It's not about the superior alpha which you generate or the time which you have given. Thank you for inspiring a younger generation from a son of a farmer to becoming a best fund manager in the country is not an easy thing, and not an easy path everybody can walk. I'm sure this will inspire many young investors. Thanks for doing that, Samit.
I hope so. I think if you do anything with that genuineness, with not your selfishness in mind, but if you're doing it for the right perspective, I think things fall in place. And I am an example of that. I haven't been working in a sell side. I was never an analyst. I was just an individual investor and directly jumped into becoming a fund manager with the right attitude. Because see, as a fund manager, there is always a conflict between the business and then the interest of the investor. Because if you make it too big, it will impact the returns for the investor.
True.
So do it with genuinity and with the right interest in mind, and things will fall in place. Absolutely a pleasure. I hope it inspires at least a couple of people, and they are on the right path.
Thanks, Amit. Thanks a lot for taking out your time. It was really a wonderful
Sure.
session.
My pleasure. Absolutely. Okay, Sai. Bye.
Bye. ఇప్పుడు మీకు సమిత్ వర్తక్ గారి ఇంటర్వ్యూలోని మనం తీసుకోవాల్సిన కీ పాయింట్స్ ఏవైతే ఉన్నాయో వాటిని తెలుగులోని సమ్మరైజ్ చేస్తాను. ఫస్ట్ థింగ్, ఆయన ఏమన్నారంటే ఎప్పుడైతే మన ఇండెక్స్ యొక్క వాల్యుయేషన్ పీబీ లెవెల్ చూడండి, పీబీ లెవెల్ 2 రేంజ్ దగ్గరలో ఉన్నప్పుడు ఇన్వెస్ట్ చేసినట్టయితే ఇన్వెస్టర్స్ ఆల్వేస్ మేడ్ మనీ. సో ఆ 2 రేంజ్లో ఉన్నదో లేదో మనం ఎలా చెక్ చేయాలి, అది మీకు ఎవరికైనా తెలియనట్టయితే నేను ఈ వీడియోలో ఆల్రెడీ 1.5 year బ్యాక్ చేసిన వీడియోలోనే ఎక్స్ప్లెయిన్ చేశాను, ఎండ్ కార్డ్లో వచ్చాను, మీకు తెలుస్తుంది. సో ఇప్పుడు ప్రజెంట్ చూసినట్టయితే మార్కెట్ కండిషన్ లాస్ట్ ఇయర్ అక్టోబర్తో కంపేర్ చేసినట్టయితే బెటర్గా ఉన్నాం, మార్కెట్ బాగానే కరెక్ట్ అయింది. బట్ ఎగ్జాక్ట్లీ బాటమ్ అయితే క్యాచ్ చేయలేం. ఇప్పుడు అయితే డెఫినెట్లీ ఇన్వెస్ట్ చేయొచ్చు ఎవరైతే ఇన్వెస్టర్స్ ఉంటారో. బట్ ఇన్వెస్ట్ చేసినా కూడా ఒక 10% కరెక్షన్కి అయితే రెడీగా ఉండి ఇన్వెస్ట్ చేయడం వుడ్ బి బెటర్ అన్నది ఆయన వ్యూ అయితే షేర్ చేశారు. అండ్ సెకండ్ టేక్ అవే పాయింట్, ఇది చాలా ఇంపార్టెంట్. సోషల్ మీడియాలోని మనకి కామన్గా చాలా చోట్ల మీరు మోనోపోలీ స్టాక్స్లో ఇన్వెస్ట్ చేసేయండి, మల్టీ బ్యాగర్ రిటర్న్ సంపాదిస్తారని ఒక మిత్ అయితే క్రియేట్ చేస్తున్నారు. దాని రిలేటెడ్గా సమిత్ వర్తక్ గారు ఏం చెప్తారంటే, మీకు ఆల్రెడీ అది మోనోపోలీ బిజినెస్ అని తెలిసినప్పుడు వాల్యుయేషన్ మీకు అట్రాక్టివ్గా దొరకదు, చాలా ఎక్స్పెన్సివ్గా దొరుకుతుంది. సో మనం ఏదైనా స్టాక్లో రిటర్న్ సంపాదించాలంటే మనకి నార్మల్ గ్రోత్తో పాటు పీ రీరేటింగ్ కూడా చాలా ఇంపార్టెంట్ రోల్ ప్లే చేస్తుంది. పీ రీరేటింగ్ అయితే మీకు దొరకదు. సో అందుకని మోనోపోలీ స్టాక్స్లో మల్టీ బ్యాగర్ రిటర్న్ దొరికే ఛాన్సెస్ చాలా తక్కువగా ఉంటాయి. అండ్ మోస్ట్ ఆఫ్ ద మోనోపోలీస్లోని ఏం జరుగుతుందంటే వాళ్ళు మార్కెట్ షేర్ని గ్రాప్ చేయలేరు. ఎప్పుడైతే మనకి కంపెనీస్ మార్కెట్ షేర్ని ఎదర్ కాంపిటీటర్స్ నుంచి కానీ, లేదా ఇంటర్నేషనల్ పేయర్స్ నుంచి కానీ, లేదా వేరే సెక్టర్ నుంచి కానీ మార్కెట్ షేర్ని గ్రాప్ చేసినప్పుడే మనకి ఎక్స్పోనెన్షియల్ గ్రోత్ అయితే వస్తుంది. ఆ వేరియంట్ పర్సెప్షన్ ఏదైతే ఉన్నదో, అంటే ఏదైనా స్టాక్ మీద మన పర్సెప్షన్ వీక్గా ఉన్నది, అప్పుడు మనకి వాల్యుయేషన్ చాలా చీప్గా దొరుకుతుంది. బట్ కానీ ఓవర్ ఏ పీరియడ్ పర్సెప్షన్ మారుతూ చాలా స్ట్రాంగ్ బిజినెస్ అని ఎప్పటికైతే ఆ పర్సెప్షన్ చేంజ్ అవుతుందో, ఈ వేరియంట్ పర్సెప్షన్లోనే మనకు చాలా మల్టీ బ్యాగర్ రిటర్న్ సంపాదిస్తాం. సో అందుకని ఆ మిత్ ఏదైతే ఉన్నదో ఆ మిత్ని పెట్టుకుని ఓన్లీ జస్ట్ మోనోపోలీ బిజినెస్ అయి ఉంటే చాలు, ఇన్వెస్ట్ చేసేద్దాం, ఇన్వెస్ట్ చేసినట్టయితే మల్టీ బ్యాగర్ రిటర్న్ సంపాదిస్తాం అని అయితే ఆలోచించకూడదు. మోనోపోలీ స్టాక్స్లో యూ కెన్ ఎర్న్ సమ్ మనీ, బట్ కానీ మల్టీ బ్యాగర్ రిటర్న్ అయితే సంపాదించలేరని ఆయన ఒక క్లారిటీ ఇచ్చారు. థర్డ్ టేక్ అవే పాయింట్, యాజ్ ఎ ఇన్వెస్టర్ కమోడిటైజ్ కంపెనీస్ ఏవైతే ఉంటాయో వాటిని కంప్లీట్లీ అవాయిడ్ చేయాలి. కమోడిటైజ్ కంపెనీస్ అంటే ఓన్లీ కమోడిటీ కంపెనీసే రావు. ఏవైతే కంపెనీస్ యొక్క ఫిక్స్డ్ కాస్ట్లు బాగా ఎక్కువగా ఉండి ప్రైజింగ్ పవర్ ఉండదో అలాంటి కంపెనీస్ని మాత్రం అవాయిడ్ చేయాలి. ఎందుకంటే అలాంటి కంపెనీస్లో ఇన్వెస్ట్ చేసినట్టయితే ఓవర్ ఏ లాంగ్ పీరియడ్ రిటర్న్ సంపాదించడం అనేది చాలా కష్టం. వాటిలో ఎంట్రీ ఎగ్జిట్ కరెక్ట్గా ఉండాలి, అండ్ చాలామంది ఇన్వెస్టర్లు ఆ పని చేయలేరు. కాబట్టి అలాంటి స్టాక్స్ని అవాయిడ్ చేయడం బెటర్. అండ్ అలాగే గవర్నమెంట్కి సప్లై చేసే కంపెనీస్ ఏవైతే ఉంటాయో వాటిని కూడా అవాయిడ్ చేయడం బెటర్. ఎందుకంటే గవర్నమెంట్ ఏ టైంలో ఎలాంటి డెసిషన్ తీసుకుంటుందో తెలియదు, ఎంత మార్జిన్ ఉంచుతుందో తెలియదు. సో అందుకని పీసీ స్టాక్స్ కానీ లేదా గవర్నమెంట్ సప్లై చేసే కంపెనీని అవాయిడ్ చేయడం బెటర్ అని చెప్తున్నారు. సో ఓవరాల్గా ఇంటర్వ్యూలోని చాలా మంచి ఇన్ఫర్మేషన్ మనకు దొరికింది. ఇంకేమైనా మీకు క్లారిటీ కావాలంటే చెప్పండి, ఏదైనా షార్ట్ వీడియో రూపంలోని ఇంటర్వ్యూ నుంచి మీకు ఏమైనా అర్థమైన పాయింట్స్ ఉన్నట్టయితే నేను ఇంకొక షార్ట్ వీడియో రూపంలో మీకు ఒక క్లారిటీ అయితే ఇవ్వడానికి ప్రయత్నిస్తాను. అండ్ ఇంటర్వ్యూ ద్వారా మీకు ఏదైతే క్లారిఫికేషన్ తీసుకురావడానికి ప్రయత్నించా ఎఫర్ట్ హెల్ప్ఫుల్. ఇప్పటివరకు వీడియో లైక్ చేయనట్టయితే వీడియోని తప్పకుండా లైక్ చేస్తూ మీ ఫ్రెండ్స్ అండ్ ఫ్యామిలీ మెంబర్స్కి ఈ వీడియో హెల్ప్ఫుల్ అవుతుందంటే వాళ్ళకి తప్పకుండా షేర్ చేయడానికి ప్రయత్నించండి. అండ్ మీరు ఇదే ఫస్ట్ టైం మన మనీ పర్స్ ఛానల్కి వచ్చి ఛానల్ సబ్స్క్రైబ్ చేయనట్టయితే ఇక ఛానల్ లోగో మీద క్లిక్ చేసి ఛానల్ సబ్స్క్రైబ్ చేస్తూ పక్కన బెల్ ఐకాన్లోని ఆల్ నోటిఫికేషన్స్ యాక్టివేట్ చేసుకోండి. నేను సాయి కృష్ణ పత్రి మరొక ఇంట్రెస్టింగ్ వీడియోతో కలిసాను. టిల్ దెన్ హ్యావ్ ఫన్.